So is the China bull market back? Right, China's stock market has gone up by more than 5% in just the last 2 days, and individual stocks has gone up by more than 10%. Is this the sign of the returning bull market for China? Let's dive straight into it. Hi guys, this is Pete here. Welcome back. So today we're going to talk about the China bull market and in particular the Chinese bazooka. So what did President Xi do that allows the Chinese stock market to suddenly have a revival coming back from the dead? Okay, so basically he came out with a few regulation changes that made everyone very positive about the stock market. Okay, so what exactly happened? Let's go through one by one. All right. So number one is that he announces the rate cut. Okay, so he has basically lowered the policy rate in China from 2.3% to 2%. This is right after we saw Jerome Powell has done that for the US. Okay, so he has done the same for China, and this is important because this is the biggest one-day cut in history for China itself. Okay. Now, the second thing is he also eased the lending, right? So what does this mean? Is every bank in China, I think similarly to the US and other countries, is that you have to keep a certain banking reserve, right? So for example, if you have $1 of cash, right, you might be allowed to lend out maybe 4 times that amount, 3 times that amount, okay, right? So what does China do is that he lowers that requirement, allowing you to lend out more for every dollar that you hold as a bank, right? So this gives the bank the ability to loan out more money with the current reserve they have. And what's going to happen? When the banks make money from lending out loans, they're going to do more of that, right? So by them doing more of that, what we're going to see is that more money is going to be start circulating in the economy, all right? So that's number 2. Now, number 3 is that on top of lowering the banking reserve ratio, they are also increasing the spending stimulus, right? So Shanghai itself announced a 500 million yuan voucher plan. And this is going to be rolled out not just in Shanghai, but in other cities as well. And basically, what can you use this voucher for is you can use it for local hotels, cinema, restaurants, sporting events, right? Basically incentivizing consumers to spend on local entities, local enterprise in China. So they are trying to make sure that the yuan, the money doesn't flow out of China as Chinese travels overseas, but spend it in China, okay, right, to boost the economy. So I think this is going to have a huge impact in terms of stimulating the economy. And last but not least, beyond the first 3 that is already quite impactful, they have decided to inject even more liquidity into the market, right? So what happens is that he announced that they're going to inject 1 trillion yuan, which is around 142 billion US dollar, into the banking system, right? And this is going to come from a special sovereign bond sale they're going to do. This is impactful because the last time they did it was the global financial crisis in 2008, right? So that tells you this is really a big bazooka that are coming out. Now, with so much more capital flowing to the banking system, what we can expect is that there are going to be more new loans coming out and inevitably more new money in the economy, right? So with that announcement coupled by this year was also kind of like a recovery period for China, right? In the last 6 months, just the Hang Seng index had gone up by almost 25%, strongly outpacing the US index, right? In fact, one of the more famous investor, David Tepper, actually went on CNBC Squawk Box and he mentioned his investment and bets in Chinese market. And he's saying that in quotations, right, I am buying everything that China is China related. Right, that's how confident he is. Okay, so you know when there are people are making such bold claims, right, we need to pay attention. Okay, now with that said, you know there's so much liquidity coming in and whatnot. The question is, hey, what are the possible investment that we can do as retail investors, right? So I'm going to go through some of the possible investment. This is going to start from the basic stuff, right? But this should get you started. Okay, and once again, I want to emphasize none of what I say here is an investment recommendation or advice. It is really me sharing with you, right, the financial knowledge on how do you get yourself invested in China. Okay, now the first one is, of course, what we can see here is the KWEB, okay, KWEB. This is the Crane Shares CSI China Internet ETF, right? So this is a very popular ETF, right, in China that is mainly focused in tech. So in the top holdings, you can see companies like Tencent, Baba, Meituan, and Pinduoduo, which is the parent company of Temu in China, in US right now. Okay, right? So one of the easiest way is to buy a ETF like this that's focused on the tech company, because you will notice that in recent days, the tech companies are the one jumping the most. The next one is actually what we call a diversified ETF, and this is the iShare MSCI China ETF, ticker symbol MCHI, right? So this is a very diversified ETF that has other non-tech related sectors such as the banks, the energy. And in addition to that, this ETF actually gives roughly a 3% dividend yield. Okay, so whether this 3% will continue, I'm not sure, because they are also lowering interest rate over there. But it's still pretty cool that you can buy a diversified ETF that has a decent dividend payout. Okay, but if you want to buy single company, what are the considerations that you have, right? For me, the most basic, obvious choice is actually, there you go, Tencent, right? So Tencent is one of the biggest conglomerate in China right now. It is the owner of the super app WeChat and also many other gaming and payment companies in China, right? So this is perhaps as close as you can get to an ETF diversification, but still be invested in a single company, right? So for Tencent, just take a look over here. Year to date, it has already gone up by almost 47%, right? That's almost half of its value gain in just 2024. Right, so you can see that this is a company that really benefits a lot when the market is rising as well. Okay, but if you want to break down into further companies, I would say one of the most obvious choices is actually looking at the e-commerce industry, right? Because over here, e-commerce is one of the fastest growing industry. In fact, global e-commerce sales grow the fastest in China right now. And who are the biggest player in China? Very clearly, it is actually Taobao, which belongs to, there you have it, Alibaba. Okay. Both Taobao and Tmall, which is Tianmao, belongs to Alibaba, and then followed by JD, right, which is Jingdong. Okay, so in short, if you bring the e-commerce space together, there are three main players. Number one is Alibaba, which is the most diversified of them all, because Baba doesn't just do e-commerce, they also do payments through Alipay, they also do cloud, right, Ali Cloud, and they do delivery services like Cainiao, and many more, right? So it's very akin to Tencent, but not as quite diversified. So quite a easy choice here to make if you want something that's pretty spread out. Okay, but if you want to go for quality, you want something that's top-notch quality in terms of the products they sell, and that will be JD, Jingdong in China. Very sharp quality product. If you go to the Jingdong platform, you realize that it's not like Alibaba or AliExpress, where a lot of the items can be a bit subpar in terms of the quality. Okay, right? So JD is the choice if you want to go for something that's very high quality specific. Otherwise, actually the fastest growth e-commerce right now in China, drum roll, is none other than PDD, okay, Pinduoduo. Pinduoduo is actually one of the fastest growth, and mainly thanks to its growth of a subsidiary company called Temu in the US, right, that's doing really well in terms of bringing Chinese goods over to the United States. All right, now, other than all these that I just mentioned, I just want to give a shout out to some of the stocks that many of my followers, right, on my online community, which is Stock Market Genius, also mentioned to me. Okay, so these are some of the other considerations that I've heard before. Number one is that if you're looking at the EV industry, then the three big names comes into play, which is BYD, NIO, and XPeng, right? Of them all, BYD is the big brother, is the largest and also the highest in terms of market cap, and they have the highest sales as well. So if you want to look at EV, then definitely these are your choices over here. Otherwise, if you want to revert back to ETF, actually, same as the United States, you can actually buy sector-specific ETF. Now, in a running up economy, what we would expect are two sectors that will do pretty well, which is overall spending, just like what we saw earlier. There's a lot of stimulus going to the market, and therefore consumer spending is going to increase. So over here, the first ETF that I'm going to talk about is actually CHIQ, right? CHIQ is actually the China Consumer Discretionary ETF that contains a lot of stocks that will benefit when the Chinese consumers spend more. All right. Now, the next one is actually a sister ETF that is the CHIX. Now, what is this X? It's actually referring to financials, right? So these are mainly your payment gateway, your banks that's in China. So if you want to benefit from these two main sectors, right, what you can do is instead of just buying the main China ETF, you can look at actually sector related ETF over here. So at the end of the day, whether this will be the returning bull market for China, it remains to be seen, but it does seem like there's a lot of stimulus coming into the market, and we shall see whether this is useful enough, because previously it was also announced last round there was a bit of stimulus in early part of 2024, and in the end it just fizzles out, right? So will this be a sustainable bull run? It still remains to be seen. But one thing I know for sure is that when I look at Chinese market, even after the current bull run, it does seem like very undervalued. Many of the tech companies are selling at low double digits price to earnings ratio, and even for a lot of the discretionary businesses, right, consumer discretionary business are selling at less than double digit price to earning ratio, which is incredible, right? So one thing to take note for China is that, of course, at the end of the day, the political situation there plays a big role. You can see that whenever Xi Jinping says something different, the market will move accordingly. So that is one risk that you have to bear in mind and accept if you're going to invest in China. Okay, so I hope you guys learned a lot from this session over here. If you like the content that I'm putting out, right, do like and subscribe to not miss out my next video on the world economic situation and also investment. All right, so that's all I have for you. I'll see you guys next time. Bye bye.